Brian Bjorn, first and second. Nice to see you guys. Give me a quick mic check, guys. Let me know if you can hear me. And then we'll probably wait for a second or two before we start. Just give me a quick mic check. We appreciate it. And welcome back, Bjorn. Nice to see you here, buddy. Mic sounds really bad. Right on. Let's see what we can do about that. Hopefully that makes a difference. Much better background. Okay, well, that's a step in the right direction. What about the mic, guys? Still having the same issue? Still bad. All right. Give me a second. All right, I'm going to try a few things here, and we'll see if it makes any difference. Okay. That should make a difference. Let's see. I think we had the wrong mic switched on, so. Let me know now. A little adjustment made, guys, on my side. Should make a difference to the sound. Let me know. One, two, three, testing. 1, 2, 3. So still bad. Interesting. Okay, let's try this one. Let's try this one. Try these settings. What do you get? What do you get on these settings? Let me know if it's bad or worse or better. Testing, 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 testing. Let me know if it's better or worse. I'm getting a perfect from Rich. Now it's perfect. Right on. All right. Perfect's always good. Can't do much better than that usually. Huge, huge, it's huge. All right, so what did everybody think of the new background? Better, worse than the old one? White background, now we're in a dark blue. Yeah, this guy right behind me, little. Keep my head what, in this position, like this? Okay, all right, so I guess we'll get started here. What do you think, guys? I think it makes sense. Yeah, let's get started. So if it's your first time joining, my name is Kevin MURCKO, and that's the doorbell. And this is Kevin Explains. I was going to say it's Kevin Explains Crypto. It's been a long week, guys. Kevin logo, CM logo should be on the moon. Yeah, we'll probably come out with some more. Once we do the full rebranding, we're going to come out with some really cool backgrounds. But I think these are good for now. What do you think? Definitely better than what we had before in terms of backgrounds because we didn't have any. So yeah, anyway, so I'm Kevin. I'm CEO here at CoinMetro. This is a little something we like to call This Week in Crypto. It's a show. It's got 4 parts. First part is me going over news, 10 pieces of crypto-related news that have been curated by our elite Telegram group. Thanks, guys and gals, for that. I go over each piece of news. Takes me about a minute to go over each one. If it mentions something that triggers me a bit, which is usually stories about Binance in general, I may take 2 or 3 minutes, a little ranting and raving, but eventually get through it. So 10 to 15 minutes, we knock out the news. We go on to something we like to call Kevin Explains Crypto. I'm giving a word or a phrase, and well, I define what it means. Pretty simple. Then we move on to both Reddit questions and Ask Me Anything on YouTube and on Facebook this week. There's 2 or 3 Reddit questions that came in last week, also curated by the people over at our elite Telegram group. So once again, thanks for that. And I will mix and match between live questions and those Reddit questions. If you have a question, post it now, YouTube, Facebook, or post it later. I'll scroll back up once we get through the first part of the show and then go back to the old questions that were already posted. So here we go. Let's do this. So number 1 on a list of 10 of news, guys, we have Paxos beats out Coinbase to become PayPal's Bitcoin custodian. Yeah, I'm not sure. I mean, Coinbase could have been in the running, maybe. I tend to think they probably weren't for the most part. Why? Well, PayPal's in the payments business. PayPal's bringing in crypto into a payment business. Coinbase, you could say, is kind of or could be very easily a payment business. They have a lot of clients. They don't have as many as PayPal, but they're also US based. So I think Paxos kind of made sense here. Paxos being able to provide custody. Paxos is now also doing basically, I would say, like an aggregation of liquidity between, basically they've created a crypto exchange as a service for fintech apps. Yeah, and PayPal is one of the first to sign up. So I guess it makes sense. I wouldn't have seen them going to Coinbase. I would think Coinbase is a bit more of a competitor than Paxos will ever be for them. And Paxos seems pretty poised to pick up a few more of these big name clients that want to move into crypto. So good on Paxos. Yeah, I would like to see Paxos' stablecoin get a bit more traction. That'd be nice. I think it's one of the better USD stablecoins, obviously dwarfed by Twitter currently in terms of issuance size and volumes. But it's nice to see that they're branching out. They're also getting into settlements. They're getting into a few other branches, which hopefully will boost their business and perhaps might even move them out of the stablecoin business, or put them into more of a settlement business with stablecoins or CBDC-like tokens rather than trying to have stablecoins as their main business. Number 2 on the list of 10, federally chartered banks and thrifts may provide custody services for crypto assets. So I talked to a few people, and there was kind of mixed message on this one, I think. Look, the comptroller in the US, which is basically the guy who controls, it's the comptroller of the treasury, right? So he's the comptroller of the currency. He's the guy who puts the control mechanisms on the accounting side of the currency, of the US dollar, right? That's what he does. This guy used to work at Coinbase. He was an executive at Coinbase, right? So when he left and took that job, which I'm sure he took on the blessing of Coinbase to try and push, let's say, more likable regulation through different arms of the US government, he said openly that he was going to be very, very open to crypto and open to blockchain and how that technology relates to the financial markets in the US. And that's exactly what he's doing. So I think that's great. Understand that the comptroller doesn't actually write law or regulate it in terms of banks holding custody. What he simply said is that, by the way, guys, in case you don't already know, you can actually custody crypto assets. Most banks that have a legal team worth more than 16 euros and 35 cents probably already knew they could custody crypto assets. The point of that is, do they really care? Is that a business they want to be in? Look, there's one thing that chartered banks are really good at, and that's loaning money that they don't have, right? Fractional reserve. They're awesome at that. And most people are starting to move away from banks for traditional banking services. Historically, and in the future, banks have never been and will never be the place people go to trade or to interact with assets. When you go and when you heard someone say, "Oh, I just picked up some Apple stock," do you usually hear after that, "at my Bank of America account"? No. Like, most people hate their banks so much that they would rather never use them, but they're forced to because they have a paycheck or they need to pay bills. They don't want more services given by the bank. And I think the banks at some extent realize that. And for them, the market cap of crypto is, well, meaningless, especially now when they can loan out literally infinity times the money they have on deposit. That's infinitely more money can be made doing that than it can be custodying 200 billion, even if they had the entire market cap of crypto. So I don't see them as jumping into this. I don't really think it's a threat to exchanges. I don't think it's ever been a threat to exchanges. I think when it comes to fintech in general, when it comes to trading, when it comes to innovative financial applications, banks always lose and they suck at it. And they will continue to suck at it because they make tons of money with having money, which all of us exchanges can't do. So thus, I think we're both going to stick in our, on our sides of the fence. And I don't see banks really taking over this industry. In terms of custody, large-scale custody, perhaps for things like ETFs, custodying of physical crypto for things like ETFs and futures, there may be a future there for banks. Some banks, probably not retail banks, probably not federal chartered banks or thrifts either, but mainly for large-scale kind of merchant banks, more than likely. Number 3 on the list of 10, Coinbase and other crypto exchanges are designing a P2P system for sharing user info under FATF rules. Well, news to Coinbase and other crypto exchanges. Why? I'll let that hang out there for a second, because everybody I think here knows, and if you don't know, I'm kind of the regulation guy, but I'll let it hang out there for a second. Why? And I guess I'll tag this with my famous kind of like, who fucking cares? And I'll tell you why in a second. Look, FATF rules. They're specifically talking here about the travel rule. Let me explain to you what the travel rule is. Basically, if I'm a regulated exchange or bank or whatever, and I'm sending money on behalf of one of my clients to another regulated entity, I have to tell that entity who the money is coming from. Yeah. So we're going to build a system to do that? Really? Do we need a system? Why don't, what are they going to build? Some decentralized blockchain that sends its hashes over with all the information with the client's name, and then has to be rehashed on the other side. And then there's, multi-key signatures for the data. Great. That sounds all technically awesome, but who fucking cares? In traditional finance, the travel rule is basically done literally by like emails, not necessarily emails from Google and Gmail accounts, but essentially a system very similar to emails. I see no reason to make any different system just for transacting information to comply with the travel rule. You can send secure information without needing blockchains, without needing DLT. And in fact, because of GDPR and other things, blockchain makes it difficult. Why? Well, you can't destroy the data after 10 years when the relationship ends. So what do? I've seen systems that actually take the data and just make it not searchable, but it still exists. Which means if it exists, even if there's no searching mechanism, it's still searchable some way, shape, or form. So I think at the end of the day, this is just like, this is a who cares. Look, if you have to share the data, you have to share the data. There's a million secure ways to share data, a million transfer protocols. There's no reason to make a new system. Number 4 on the list of 10, US government misses deadline to release cryptocurrency regulations. I have a comment next to this one that cryptocurrency exchanges will share client data as stipulated in section 6045. So this section 6045 of sharing data is exactly what we were just talking about, the travel rule. Again, not a huge deal. When this came out, I remember everybody and their grandmother saying that crypto couldn't adapt and that, it was going to be terrible and horrible. And how are we going to adapt to this new policy change, which wasn't really a policy change. It was the application of an old rule that came, I think, from the Patriot Act initially, 2008 maybe in the US, which is where FATF really started to get some teeth. But yeah, okay, so the big story here, I guess, is US government missing a deadline. So welcome to the party, US government, and awesome. Not to mention, honestly, the governments in general miss deadlines all the time. They're experts at it, actually. If you want to know how to miss a deadline, call up your local government. I'm sure they could write you a book about how to miss deadlines by small amounts and by large amounts. So not really a surprise that US government missed a deadline. But yeah, look, cryptocurrency regulations, I think it's a bit of a misnomer. They're regulations and how they will apply to cryptocurrency exchanges. Everybody else in the world is doing it. The US will do it as well. I did see at Singapore Blockchain Week, actually, Hester Pierce, so currently head of the SEC, basically said that she didn't agree with the Telegram ruling and that there was no reason why the US government should have went after the entire ICO. And I thought that was quite cool. So I think there's just a little bit of a back and forth between the new powers that be and maybe the original drafts that were created to apply to cryptocurrency exchanges and the like. And I think that's why they're late, which is good for all of us. So number 5 on the list of 10, Robinhood postpones UK launch indefinitely, freezes global expansion plans. I'm going to get brutally honest on this one. Brutally honest. This may cause me a bit of trouble, but whatever. Guaranteed, they're delaying that launch for a few reasons. One, maybe regulatory, but I kind of doubt that's what it is. It's they had this pretty bad PR. Some kid thought he lost $750,000 and killed himself because of Robinhood. Well, because of bad UI or UX or something like that. Look, I'm still waiting on the regulatory kind of the lashing that's going to come from this, and the regulator trying to protect investors by somehow, I don't know what, reviewing everybody's UI UX. I don't know what to expect from that, but I do think this is why Robinhood held back, and I think it's stupid. I think they need to push forward. I think the fact that they're saying that they don't want to move in expansion is telling the regulator they did something wrong. And them telling they did something wrong means what they did wrong was they had apparently a bad UX that caused one individual trader who probably shouldn't have been trading to assume that he was in massive debt when he wasn't, right? I think that's I think it's a horrible thing that happened, but I think it is also a horrible thing for the company to simply drop to its knees and stop what they were doing. Look, bad things happen. And you can blame Robinhood, you can blame the regulator, you can blame society. You can blame anybody you want. At the end of the day, though, innovation and these guys pushing forward, I think they made a huge mistake in stopping. We'll see how that plays out. Maybe it gets them some good PR. Maybe it gets them some warm and squishy PR about how they're such nice people and I don't know what. But this is business, guys. And, to be honest, Robinhood did nothing wrong legally. Whether it's bad PR, well, then, get some good PR. How do you get good PR? Expansion. So anyway, moving on. Number 6 on the list of 10, digital yuan CBDC momentum grows as more Chinese firms get to testing. Yep, we've already known about what this yuan CBDC, central bank issued digital currency now for about, like 45 years now, guys? I mean, when did we hear about this first time? It's been a while. There's a few companies now that are talking about that they're in the testing. I think Didi, a taxi company like a Uber, talked about potentially being in the testing. There's a few other large companies. Great. This doesn't take that much to test. I mean, seriously, guys, if they're using an already known and tested protocol and all they did was make a token on top of it, how much testing do they absolutely need? Not much. So I think they should either get along with it or they're going to lose. And some other country is going to come out with it first. There's lots of countries now. Pretty much every central bank in the world now is looking at potentially issuing a CBDC. I think China's doing something here that doesn't really make any sense, in that a central bank issued digital currency isn't made for retail use. It is a central bank issued digital currency that would be used for settlement among banks for money to move faster, to underpin current operations that happen with, let's say, dematerialized currency versus digital currency. So it's a bit weird to me that their first tests are with, retail facing companies. I think China doesn't understand exactly what they're doing or where the real good that could happen from an implementation of CBDC is. But if they want some answers to that question, they can always give me a ring. Number 7 on a list of 10, over 60 million in Binance coin destroyed in latest coin burn. I also have a comment here that says Ciphertrace declined to state how large that customer base is, saying only that Binance is among them. Ciphertrace has previously boasted 150 partners. So I guess Ciphertrace is the one that provided the information for this article. Yeah, okay, so anyway, Binance article, so this is obviously going to trigger me a bit. So they burned some, great. I guess for the tokenomic geeks among us, token burns always, make you giddy, I guess. But for the regulator folks among us and the guys that actually try to do things correctly, us, every story like this always kind of pisses me off a bit because, people just don't see what's in front of their face, literally. And, to a certain extent, I understand. Look, I was a trader for years, active trader. Somebody would tell me about, oh, this company's trading against you. This company is a market maker. And, who cares if they're filling my orders? I don't really care what they're doing. And I can see that. And that's really what the retail public is saying to Binance every time they go and use Binance, is that we don't really care how you run your business. But trust me, once shit hits the fan and it will eventually, they will care. So yeah, token burn, great. BNB, just not my cup of tea. And Ciphertrace, I've seen some articles with Ciphertrace, data analytical company, does similar things to what Parsec is doing in terms of data aggregation. But I think Parsec's doing a little more interesting stuff, to be honest. They're not just printing PR releases about Binance. But here we go, number 8 on the list of 10. SEC registered broker-dealer is launching a security token platform. So I said a million times that there's a ton of ATFs or ATSs, licensed ATSs in the US and MTFs in the EU that could potentially at any point, at any time, launch a security token platform. But does that solve any problems? Well, no, because markets are segmented. This continues to segment them. And unless there's centralized global clearing, even if there were 1,000 ATSs with individual liquidity pools, who cares? So looking at, we have, I'm just going to look at, to launch Gladius, a regulatory compliant security token platform. So obviously we're talking about secondary, I would imagine. Let's see if I can dig in here. It's just, it literally is an article of bullet points. Okay, more access to capital, great. So it looks like they're going to do primary issuance as well. Broker-dealer does not have appropriate license to offer secondary. The broker-dealer does not have the appropriate license to offer secondary trading or custodial services. Wait, I think I just had a seizure. Wait, so they're going to offer primary issuance. So come raise money on our platform, but you can't trade, and we can't hold the assets for you. Right. So I usually only have one who fucking cares on every week's show. This is definitely number 2. Jesus Christ, who fucking cares on this one? I think we'll add a little more fire onto that one. Number 9 on a list of 10: stablecoin ties to traditional finance, a problem for transparency. Stablecoins ties to traditional finance. All right, now this I can't get any information out of that title, so let me run into this article real quick and do a quick scan because I have no idea what that means. Stablecoins have seen their importance in the crypto market. Okay, great. Grow rather dramatically over the past year for Tether. During a recent episode of On the Brink podcast, highlighting that the biggest accusation leveled against the likes of UDT pertains to the fact that it is not transparent. Okay. And then, so what is he going to compare that to the traditional market? That's obviously not transparent, or what? It's not the parts that are trackable on chain. It's the kind of parts that are off chain. Okay. All right. So I guess what he's saying here is that, what this writer is trying to say is that tying stablecoins to traditional finance, traditional meaning off chain, that it's less traceable, trackable, and auditable than it would be on chain. So is connecting stablecoins to traditional finance a problem for transparency? No. Connecting stablecoins to fraud is a problem for transparency. Connecting stablecoins even to the most traditional pen and paper traditional finance, as long as it's done honestly and the way it should be according to the law, there's no issue with the transparency. In fact, it would only help that traditional market player garner probably more trust in the market. So I think inherently, no matter what you're talking about in terms of finance or anything else, if you're talking about someone doing something fraudulent or lying, then regardless of what you tie to it, you're going to have an issue. Number 10 on a list of 10, Ciphertrace says it can instantly flag shady transactions with predictive risk scores. And Kevin MURCKO says they cannot. So I always love these lofty statements. So the statement should say Ciphertrace believes it can instantly flag what it believes to be a shady transaction with its predictive risk scoring. Let me tell you something about predictive risk scoring. And I've been around predictive risk scoring in FX. I've been around it in crypto. I've seen risk scoring models that are automated, semi-automated, and I've seen them from the largest companies in the world, Bloomberg, Reuters. I've seen them from small companies. None of them work accurately. Why? First of all, what's risky to my business might not be risky to yours. What's risky to me personally is definitely probably not what's risky to you. Even when you tie it directly to a law, these things are inherently predictive, and they use subjective data to predict something. So it's great that there's tools. The problem with these type of tools is many people that don't know about risk scoring, risk score modeling, or how even to read a risk score or risk policy end up believing what they get out of these systems is 100% accurate, and it never is. And that leads to, guess what? Higher risk. So always be cautious with this type of thing. More data is never a bad thing, but don't trust one single point of data because they say, quote unquote, we can instantly flag shady transactions. The fact that they say shady in there is already something that would raise a flag to me. Shady is not really what I would call vernacular to be used in a PR statement about something that's trying to do risk monitoring for a financial entity. All right, so that gets us through the news. Let's jump in real quick to Kevin Explains Crypto. By the way, guys, I see 39 people currently live in the chat. I see 3 thumbs up on my side. I'm embarrassed. And that's why my eye's swelling up. You see my eye over here swelling up? It's because of the likes, man. Like, come on, guys. Anyway, if you haven't subscribed, subscribe. Please give us a thumbs up, like us on Facebook, whatever you got to do. Kevin Explains Crypto. So Kevin Explains Crypto this week. I think I might have done this. I don't know if I'm getting deja vu every week or what it is, but this week's Kevin Explains Crypto, I guess, phrase, how to short Bitcoin. Right. The big short, huh? So how do you short something? How do you short? Now, a lot of people, I would say definitely at the SEC, consider Bitcoin to be a commodity, right? So how do you short something, especially when you don't own it, right? Well, that's where synthetics and margin come into play. So here at CoinMetro, obviously, we have a margin platform. There are other brokers and dealers and exchanges around the world that have either futures platforms or have margin platforms. So essentially, we give you credit, and you can short that credit. It means you can short something you don't own. And that allows you to short Bitcoin because obviously, if you buy Bitcoin and then you sell it, you're not really shorting it unless, I guess, hypothetically speaking, you are against whatever fiat currency you happen to deal with on a daily basis. But in reality, the only real way to see an active P&L or an active profit and loss, hopefully an active profit from shorting Bitcoin or selling it, is to do it synthetically and to do it via some type of credit mechanism like our margin platform here at CoinMetro or on any other margin or credit facility, futures platform, et cetera, that may exist online. Obviously, you should do it here, though, because, well, we're just better and awesome. So there you go. How to short Bitcoin. That's Kevin Explains Crypto for this little blurb inside of This Week in Crypto. Make sure, again, subscribe, guys, if you haven't, and go ahead and give us a thumbs up, like us. It makes us smile, makes us feel better. My eye will stop swelling up every Friday because, I think it does that because, we just don't get enough likes, to be honest. It's a lack of likes, eye swelling. I read about it on WebMD. I can't find the link, though, so don't ask me for it. All right, so moving on to live Q&A. I'm going to jump into 1 or 2 Reddit questions here since there was 1 or 2 here. 2 actually. We got one from GBTG bro, GBTG. Jesus Christ. I don't know, I probably butchered the hell out of that one. Sorry about that. Hi, Kevin. How well suited is CoinMetro to survive the looming financial crisis? Do you think investors will back out in such uncertain times? How well is anyone suited for the looming financial crisis? I think the crisis that's looming, I think there still is potential for that crisis to be softened, and not just from printing more money. But I do think certain industries are going to see probably the biggest change that they've ever seen over the next years. I think this crisis that's looming is going to be quite prolonged. And I think it's going to touch industries like commercial real estate, for example, that really have never seen a brutal kind of reality check. And it's kind of been building up, right? You have the WeWork scandal. Maybe remember WeWork? Let's value a company that simply takes out licensing, that takes out rental agreements and then re-rents property they take out rental agreements for 15 years on commercial property at super high rates, then subdivide it and then create contracts with absolutely no minimums to a bunch of companies who may not actually need the space and then gets valued in the billions. You guys remember that one. Okay, so it kind of started there, and now we're in this thing where most old school companies, let's say the CEO is in his 50s and everybody's like, we should try remote work. Remote work, you got to be in the office to get things done, something like that. That's kind of what they say. I mean, maybe that's not verbatim, and then all of a sudden Corona, and well, shit keeps getting done. And then the guy's like, well, wait a minute. I'm paying hundreds of thousands of euros, dollars, pounds a month for real estate for what? And wait a minute. I'm putting my financial, I have a hedge fund. We went to Wall Street because, well, it's Wall Street, right? So I'm paying $500,000, 300,000, whatever, in rental costs. But not only that, I'm paying Wall Street salaries, even though I had to get some of these guys to move in from out of the country, from Minnesota, from, South America, where I could have paid them much less and they could have lived equally or even better lives. So why don't I just send them back there, rent substantially smaller office space in different countries, and screw this big office building? So I think all that's going to come to a head. I think for us in this digital realm, it's probably only a good thing. I think there will be bumps and bruises along the way, just like there would have been regardless. But people are going to start to go more remote, more digital. The world itself is going to go more digital. More finance is going to go digital. People are going to still have that mistrust for banks, and maybe even more so as the financial crisis starts to get just more and more heavy, and banks start to do what they always do, and that's screw their customers, because they're pretty good at that too. Not all banks, but 99% of them, more or less. So yeah, at the end of the day, I think that for companies like us, for fintech, for crypto, for companies that deal in just digital money and trading and things like that, I think it could be kind of a golden decade that's going to come up. And I do believe that. So do you think investors would back out in certain times? Look, I've met investors that back out because there was 3 days of rain in a row. I've met investors that back out because their psychic told them that when they read their palm last Tuesday, that they should reduce some risk. So I mean, people back out for a myriad of reasons. The investors we have are already in, and I think they're in for the long haul. So there's really no way to back out. And talking about new investors coming on board, sure, crises sometimes in certain investor circles make things much easier. In others, that makes it much more difficult. But generally speaking, I would say, regardless what happens in the world, capital raising and things like that are always difficult. They're never easy, but it doesn't necessarily mean they're harder. It just simply means you got to look for a different class of investor. That's it. And then from Nixon, has the DeFi bubble a positive or negative effect on CoinMetro and the CSD? I think the current DeFi bubble is about as horseshit as pretty much anything else in the universe right now. The DeFi bubble is built kind of by the same techie geeks that started the ICO bubble. It'll probably be a bigger bubble because obviously people like to see returns, and they're getting returns. And because they're not getting returns on fiat money, you can still escape, for the most part, regulation. The regulation will catch up to DeFi pretty fast, but you're not going to see 14% returns for a very long time. Right now, let's say the demand in the market to actually take the loan is much larger than the demand for the interest. But when the floodgates open and the demand for the interest increases, the demand to take the loan is not going to increase at the same velocity, and those rates are going to tank. Not to mention that I'm not going to name names, but there are a myriad of websites out there, DeFi websites, that are 100% fraudulent. And I think we're going to see a bigger bubble and probably some blowback. But in terms of, any eyes on the market, even if you can get a client even through bad means, somebody's like, man, look at these idiots, and someone looks at you and you're good enough to convert them, then good on you. That's still eyes on your project, right? Eyes on your business. So I don't necessarily see it as a bad thing. I haven't really felt so much change at CoinMetro or the CSD. I think we're kind of I don't want to say above DeFi, because the idea of DeFi is great. We haven't achieved even a percentage point of what should be achievable and what will be achieved in terms of decentralized finance. And right now, the CSD isn't completely decentralized because it can't be. Obviously, CoinMetro isn't decentralized because we're just working on a different business model. But over time, both of those companies are going to go more decentralized. And I think DeFi is great, and I think we're definitely going to do something in that space. It's just right now, it's 99% garbage, and I don't need to be part of the garbage. I'll wait for the garbage crew to come in and clean it up a bit, and then come out with something that actually makes sense and is sustainable. All right, let's see what we got going on. I'm going to scroll here through comments, see what kind of questions we got rolling in. I see we were fighting over first place, so that's good. Nice to see some fighting, infighting here. All right, so we got this one from Bjorn. Did you hear about how CZ tried reclassifying BNB as DeFi coin? Yeah. Look, fucking CZ, man. Anybody, if CZ, if you're listening, let's have a debate, bro. Seriously. Like, I don't know, you pick the day, the time. Dude, I'll do it blindfolded, and I'll only get to give 19-word answers, and I'll still have a great time. You know, it's so ridiculous, man. I mean, it's kind of like, I feel like I'm the only guy in the room that can like see what's happening, and like everybody thinks I'm crazy. Like I'm in like a padded room, banging my head against the wall, going, nobody can see this, and everybody's like, oh man, this guy needs his, you know, where's his medication? The poor guy, you know. And then eventually it actually happens, and everybody else realizes they're crazy. It's like a Twilight Zone episode. For fuck's sake, man. Anyway, so yeah, look, CZ is going to do anything he can to make more money. Let's just stick it out there. That's it. He's not there to help you. His company is not there to, you know, usher you into this great world of crypto, to educate you. And the only reason he's there is to make more money, and he'll do whatever he can to make that money, whether it's on your back or someone else's. Yeah. Anyway, I'd love to have the debate though. Like, I think it would be awesome, actually. I mean, if anybody hasn't heard, Tyson's coming out of retirement, doing an exhibition fight with Roy Jones Jr. on the 21st of September. Maybe on the 22nd of September, we could have an exhibition fight between myself and CZ. You know, I think that would be awesome. I'd pay money to see that. I'd pay money to watch myself in that, actually. All right. All right, scrolling through here. Let's see what we got. Okay, here's a question. Boom. All right. Hey, Kev, great to catch you on the live Q&A this morning. Yep, I saw you on there. Nice questions you threw up. Appreciate that. Can you let us know more about Cog Network? Are they going to be doing a bond issuance? Any idea when we'll get a first glimpse of it? So Cog Network. So Daryl from Cog Network is tied into one of the same group of investors that is part of our angel investor round we did last year in November. So I met Daryl when I met those investors back end of last year. And at that time, you know, he was kind of having the same struggles. They were going through, you know, they have a fund in the Caymans. They've already have all their exemptions, and they were under this impression that they needed a quote unquote compliant token. And anyway, he's got a board. He's got other people that work with him. We discussed actually right after the chat, the Q&A we had this morning. We discussed about them potentially doing a partial offering for their fund via CoinMetro and Ignium. And I don't know if that's going to go forward. We'll have to see. I think there's potential there. I think it would be great for him and great for us as well. You know, what they're doing is interesting, and I don't see any reason why they shouldn't run a quick test case. You know, raise $500,000, million, 2 million, whatever it is, through our system, and this way they can show to their broader investor base how the tokens actually function, how it's going to work, and then they can launch a bigger offering through the U.S. When they're ready in terms of all the regulatory burden that they're going through. So as far as I know about Cog Network, so Daryl's got a lot of experience in mining. I think that's where he made a bulk of his own money. The Cog Network itself is a fund of funds kind of thing. There's traders in there that trade crypto assets. They trade traditional assets. He's also got some plays that he mentioned, like on solar power, which I think might be tied to mining as well. And yeah, so they have a few different business ventures that all feed into this fund, and basically they're tokenizing the fund. So you buy a token, you own a certain percentage of the fund, thus you get the profits or losses that the fund incurs based on the token price, right? So anyway, I think they're doing something cool. We don't yet have a fund to tokenize on Ignium and through CoinMetro on the secondary market. So I think it'd be unique, and we talked about it. We'll have to see where it goes, but right now there's no specific plans. So you'll have to email, I think, Daryl at, I think it's cog.network or something, and ask him about it and see what he says. Let's see. Yeah, Daniel P. complaining about the likes. Yeah, man. Jesus, I'm gonna be like Santa Claus, man. If you don't like, I'm gonna like disappear. Like literally, I'll just disappear off the screen. I'm pretty sure I can do that. Actually, I can make myself disappear, and you'll just see the background. That might be funny. I should have just did it and not said it, because now it won't be funny anymore. All right. Another question from Crypto TC. Any thoughts on the 40K Euro XCM market buy, Kev, a sign of things to come? Yeah, well, I think generally speaking, yes, it's a sign of things to come. We've onboarded a few clients that have their own, Australian clients actually that have their own super fund. Anybody who doesn't live in Australia, basically what that is, it's a self-governed retirement account. And some of these, there's actually been 2 or 3 of these that have onboarded lately. Obviously, we just brought on Australian dollars, so pretty good timing. And yeah, they're just looking to add some assets into their portfolios. Some do have ties back to FXPig. So yeah, I think FX. One thing that could show by this, this whole idea to like treat your clients like family, basically, to treat them as you would want to be treated. That old nonsense you heard in kindergarten is actually true. And we've had clients at FXPig for years that they want to get involved in crypto now. And where do they come? Well, they come to CoinMetro, obviously, because we know how to treat our clients. So I think that shows a lot of things to come. Treating your clients the right way, man, is paramount to success in business. That doesn't mean you can be successful. You can't be successful when you treat your clients like shit, finance. But at the end of the day, the better you treat your clients, the more longevity you have. That's for sure. So. Okay, let's see. We have one from Brian Ortega. Can you compare CoinMetro with Binance and KuCoin for new users? Holy Christ, how much time we got? Yes, I can. Yeah, I don't know if I should take a breath on this one. I should get a sip of water. This might take a while. Look, from a high level, and I said this during the beginning of the show here, right? As a trader, and I've been a trader for years, right? And I've traded at every type of venue on FX. And I've traded at market makers. I've traded directly with ECNs. I've traded directly, competing directly with desks at banks. Even done OTC trading. Even done deliverables. And at the end of the day, as a trader, sometimes you'll trade with a venue you don't necessarily agree with on their market practices, but you just want to get an order filled. And I think generally that sums up what Binance is today. Binance fills orders, whether they do it through their own book, whether they're trading against you, whether it's synthetically filled and you don't really know, but you don't really care, you get your order filled. So you go to Binance. Binance, outside of that, when you look at everything they're doing, I don't really see, I don't see a company that's built to be in a regulated market that can maintain itself, be stable, and still provide actual services that resemble the services they provide currently without any oversight. And when it comes to KuCoin, KuCoin's own token is a security. So that in and of itself is already an issue. As far as, to be honest, most exchanges, all fake volume. That doesn't mean, look, when I say there's fake volume on exchanges, and there absolutely is fake volume on exchanges, you can, without being technically savvy, without having to go and look at numbers and monitor books, you can simply take Binance again as an example. Look at Binance and then compare their volumes on every one of their sister exchanges that has a license. Compare, even compare, if you can find these numbers, and it may be public somewhere. Like, let's take, I don't know, clients that live in the UK that trade on Binance, or clients that live in X country that trade on Binance, where there also is a regulated Binance, and then compare the volumes. The point to be made there is that when there's regulation, they don't do the same, they don't have the same tactics in place that they have on their main exchange. And that should scare anybody that works with their main exchange. When there's no transparency, when there's no real accountability, and it's just a PR machine, and that's where you're putting your money, that should scare you. And I think it just boils down to how customers are treated, the access you have, being able to ask right to the CEO a question that generally will get answered, when you ask it, the ability to have 24/7 support, the fact that we're constantly talking to regulators, that we're constantly talking to banks. We don't go through third parties of third party. We don't announce that we have credit card gateways, when in reality it's the gateway of a third party through a third party through a third party. Because, we can't get any direct representation. Why? Well, because we have no bank accounts, because we have no regulation, and because, no one will open them. And so it's just the way the businesses are run. At the core of it, when you look at the business, obviously there can be similarities, right? We've built things in-house. We've built things in the mind of how to help our clients make money, how to help our clients succeed, not how to help CoinMetro make more money every time you press a button. And I think that also separates us from most of the crowd, right? Obviously, we're a business. We need to make money, for sure. But we also understand that to make money, we need to make clients happy. We need clients to be able to make money themselves. If our clients can't make money, then we're not going to make any money, or we shouldn't. I should say we shouldn't. If they don't make money, we shouldn't make money. And I think that kind of mantra, that mission, and that viewpoint is not shared by almost anyone else. There's very few players. Buddy of mine, Jeff Hancock, CoinPass in the UK, another exchange that I think is on the same level as we are in terms of how they want to treat their clients, regulatory, et cetera. So big shout out to Jeff. But that list is short, guys. It's super short, that's for sure. Another question coming in. Hi, Kevin. Could you introduce CoinMetro's development team? Are they in-house people or is it an external team? If it's external, can you ensure that problems with previous external team don't repeat? So it's a combination. So Salvatore, who's our CTO, is internal, doesn't work out of Talon, works out of Malta, but he's internal, he's a shareholder. We have people on our development team actually that even came from Telegram. So from our Telegram community. And then yes, we do have what would be considered, I guess, an external team. It's a company in Latvia, which we've also used for the CSD. You know, I think you need to kind of see the difference between a remote team, an external team, and then simply, let's say, you know, when you hire someone on a project base. So when you go online, you hire somebody on a project base. It's much less of a connection to those workers, much less of a communication than we have, say, with the team in Latvia. We have calls 3 days a week. We're constantly in communication with them. They're on our internal Slack channels. We deal with everyone on a first name basis. We deal with their head of product all the way down to their programmers, to their coders, to the architects on the team. They deal on our side with our product owners. They deal on our, so it's a much different way to operate things. We have full access to the code. We do not allow access to any external or sometimes even internal teams to all our systems. So we segment duties, we segment access. So look, you should always come into a relationship with an internal or an external employee and understand that relationship may end at some point. And you need to protect yourself, you need to protect your company, and protect your clients. And obviously we've had instances in the past where you know, nothing major has happened, but we've had, you know, attempts at trying to you know, thwart our good name. And you know, but relatively speaking, we've been able to make sure that you guys as our clients are protected, and us as a company that we're protected. And you know, we continue to do that. Continue to heighten. You know, we just had a recent case internally that we had to renew one of our developers, one of their contracts, and we asked them for documentation. And they asked us why. I said, well, 5th anti-money laundering directive. Now, not only from clients, but even from employees, we need the same level of identification, right? And that particular remote employee didn't want to supply what we needed. So we ended the relationship. And that may seem, you know, that it's not something that we want to do. But remember that those type of things can, even when the working relationship is great, even when what they create is awesome and everything's cool, and then a regulator comes in to do an audit and finds out that you don't have documentation on that employee that you should, and that puts a risk on the company. So even when you don't, lots of risk that can happen in a company is actually risk you don't see. It's not that palatable risk like, oh, this guy tries to, I'll wink one at Oliver for this word, but extort us. That's for you, Sherry. So it might try to extort us or might try to blackmail us. It's also, everything's running smoothly, but we don't actually do what we're supposed to do in terms of document collection or in terms of making sure that everything's kosher in the company. And that can also affect clients because it can lead to seizures of licenses. It can lead to all kinds of things, closures of bank accounts. So there you go. I think the system we have in place right now might not be the best. And I don't know if we'll ever have the best system. I don't think anybody does. But I think it's pretty well structured for how we work. All right, rolling through. Brian asking, we have X5 leverage raised not so long ago from 3X, but when will it be more like X10, 10X? Look, we're constantly having discussions in here about raising collateral limits, about adding XCM into margin, about raising that leverage from 3 to 5 to 10. There definitely will be a limit, an upper side limit in terms of regulation. While the regulation doesn't specifically apply to crypto, in terms of retail trading, usually in the EU, UK, you're limited to 25x. And on some assets, it's even lower. So I think 10x might be the highest we go, at least in the medium term. And I think we will get there on majors, micro caps, mid caps, miners, things like tokens, for example, especially with smaller market caps that are less liquid. We probably wouldn't go as high as 10x. We may limit those to 5 or 3. It all depends on the asset itself. But we will be raising it. There will be a point where we will stop. So yeah, there will be a maximum, that's for sure. We're not going to go to 100x. We're not going to go to 75, at least not on the current iteration of the platform. But it's coming. But it's a process, guys. It's not something that we want to do one day to the next. It's to protect us from risk. It's also to protect our clients. Bjorn asking, how is marketing progressing? Progressing quite good, actually. So we've had a few more tests here and there. We're about to come out with a much larger test, similar to that 5 and 5, but a better one with some different parameters to limit the exposure to non-active clients. And that's going to roll out pretty soon, along with some competitions, new competitions that are also going to roll out. We're also going to be seeing things like, like we saw with the leverage, perhaps even XCM on margin, which everybody's been asking about. So there's going to be lots of things that we're doing kind of in a domino fashion to slowly start and build up momentum. Trick is that we don't do it all at once, and that we pace ourselves. We want to get exposure for these things. We want to be able to do PR like we did for the integration of the Twitter sentiment indicator and things like that. We want to be able to do similar things for all these different releases and changes that we're going to be doing on the platform. Because even while the platform may not be new to all you guys, it's generally new to lots of people. It's generally new to most people in the world. So we want to gear up and make sure that we do enough solid PR around those changes, along with what we're doing here, what the platforms look like, etc. News on Tram Manager. So yeah, we have this one Tram Manager, still waiting for him to onboard. Talked about him already. Widely published author, traded for one of the most well-known traders in the 21st century, I guess, 20th century even. But still in the process. So hasn't yet activated the account. Waiting for him to do that. I've been reaching out to him. If he's listening, let's go. Let's do it, bro. Come on. But yeah, also I think we're in touch with other potential traders. Look, guys, when we're in process also to reformat that Tram page, right? The actual interface. And I think that's going to go a long way for us to be able to market it. And affiliate programs coming where you can have, your own affiliate website tied to different products. So all that stuff is going to bring more eyes on the specific products. Tram will definitely be one of them. When is your testing phase ending and your start scaling up? And you'll start scaling up, Jesus. So that's a difficult one to answer because, well, we want to get enough data from the test to be able to scale up. I think that, generally speaking, we still probably have a little bit of runway for tests. I think correlating with the bond offering, which will happen in September, we will probably start to ramp up specific things around end of August into September for the bond specifically. And plus, by then, we will have the securities marketplace out. We will have a lot of the content and all the things that marketing's been working on for that out. That'll be off their table, and they'll be able to focus more on branching out into different forms of advertising and then scaling up. Mobile update from Fergus. Yep, we have there's a new version on our beta test to our beta testers out as of yesterday, but not everybody has it yet. We had a bit of an issue with Apple where they wouldn't take our payments. I literally had to try and pay 15 times and then tell them to take my money, and they finally did. So yeah, we're going through beta testing, QA testing. I think August is a good month. I think August, we're going to get that baby out probably towards the end of August. Look, you guys have waited a long time to have a properly working, functional, and good mobile app. And I want to make sure on that first launch, we don't have, home spelt with a Q. You get what I'm saying? So make sure that we button up, that everything's standardized, that we're using standardized icons, that, people are going to be able to find the menu link because we're not hiding it on the, middle right underneath an icon or something like that. So we're going through a lot of Q&A. We have an outside Q&A testing team that's testing the app as well. So all that is underway, and compared to what we have now, it's already amazing. But I think it can be a bit better. So that's what we're doing. You see rise in signups. Yeah, we have. June, we obviously saw a huge rise in number of signups based on that promotion that we did. Though in active clients, not so much. But we have seen over the progression of the last 5 months an increase in the revenue per client, an increase in, I think, the amount of time the client actually stays with us, lifetime value. And we've also seen a steady increase in new signups. And we continue to see that even with our small tests, we continue to see increases. So we're getting closer and closer to the point where we're going to feel confident enough to start scaling up that marketing. But yes, we are seeing increases, and I think on all fronts. Definitely last month in terms of revenue per client, because we had such a spike in new clients, the revenue per client fell. But because the definition of active client was a bit loose, just like a client who makes a deposit or withdrawal. But if we redefine that definition of an active client in terms of trading, then it's still up month to month, even last month. Do you think it's possible that in Q3 you'll be able to use XCM as collateral? I would love to see XCM as collateral in Q3. Do I think it's possible? Yes. Do I think it's going to happen? Depends on a few other things, but it will happen. Whether it happens in Q3, we'll see, but it's possible. Any positive effects from the 5 promotion, or was it just free beer for the newbies? Definitely some free beer thrown around, but look, every promotion is free beer, guys. Whether we offer, even if we made you deposit, €1,000 to get 10, if all you do is go buy, spend that entire €1,000 and you have nobody that referred you and you have no discount and you have no tiers, we only make back exactly what we gave you. So in reality, all promotions for the most part are free beer. Here we gave away free beer to people that maybe aren't going to come back and buy more beer. But what it did for us in a positive light, definitely brought in some clients that will stay with us and that are active, 100%. Vast majority weren't, but there were active clients in the mix, so that's great. But what it really did was gave us a quick glimpse of what a good stress test for our compliance team and for our support team. And it gave us the oversight, and it gave them the ability to look at themselves and see how to better manage their time, how to better manage how they deal with a big influx of incoming questions, a big influx of incoming KYCs, et cetera. And that was invaluable. So for that, it was definitely worth it, 100%. Weekly Kevin explains crypto, Singapore Ignium panel, second Ignium panel today, the weekly CMA now. Am I thinking in Kevin's voice already? Yeah, I'm kind of tired of talking. I got to be honest with you. But I have a call after. I literally have a call right now. Started a minute ago. I'm gonna try to get through the rest of these questions. Specifically related to Tangible, basecampniseko.com, and then right after that, I have a call with a USD provider. So yeah, still got to listen to myself talk for a little while longer, unfortunately. Referring to Brian's question, how much money do we need in the book to allow XCM as collateral? I don't know if there's a fixed amount of money in the book. We simply want to see a maturing of the asset overall, maturing of the book. We've seen that over the past few days with this influx, this larger market order, and then this influx. I think we now have 45,000 euros worth of depth on the buy side, which is about, I would say, 40% more than what we usually had on average at a minimum. So that's good. That's already looking good. I think, at some point we just have to do it. So there's a part of me that thinks if we do it, we'll see a bit of a rocky start, and then we'll see the maturity come after we do it, because people will be able to unlock the value that's sitting in their CoinMetro accounts with their XCM. And so I do think we're going to run a test. We may have some limited collateral. We may stick a indicative value on XCM for collateral. I don't know, but it's coming. And we're gonna see. I tend to think that it may help mature XCM rather than, and that doesn't mean it won't be a little bumpy at first. But I'm okay with some bumps for the sake of testing. Preview of card designs. Actually, we got some previews of some card designs just yesterday. I expect maybe some more even today. Potentially over the weekend, you guys, Jesus Christ, you guys might get a preview. If not over the weekend, perhaps early next week. And then maybe next week we submit the card design. So then we're on our 30-day countdown until we can issue cards. What could CM do in the DeFi space? We could do a lot. We could definitely do a lot. Whether you're to be honest, collateral on margin is already decentralized finance to a certain extent. The word decentralized, yeah, we're a centralized exchange, but the protocols on which are decentralized, it's finance. DeFi really kind of means this new kind of disintermediated finance. Doesn't have to be 100% decentralized to fall into DeFi, in my opinion. But There's a lot of things we can do. Even peer-to-peer settlements. I would want to see technology that can make peer-to-peer a lot better than it is now. I think things that are out there right now are just either gimmicky or a waste of time. All these things about creating liquidity pools by depositing collateral, I think, are a bit of a mess. It's getting to the point, I think, where we're going to be able to start creating some we've already created interesting products. We're going to continue to do that. DeFi is the next place, I think, where we want to create the next interesting product. When are you listing new assets? Ongoing right now. We're reaching out to communities. We're talking to communities. We have a few that we really like that we think are coming rather soon. In talks with people like Fireblocks, in talks with BitGo, trying to figure out custody and things like that. I do think that August is going to be, we're going to see some assets launch in August, and probably month on month after that, hopefully. I know what community is split on this idea, but I want to know your opinion. What do you think about make a little marketing in, I guess was that Crypto Chico? He has a very active TG community, hates Binance. Well, the fact that he hates Binance, I guess he's already on my good side. I didn't watch the video, but I did see the headline about the Binance trying to take over crypto or whatever. Look, I can have fun on any channel. I can be serious. I can be a goof. I can talk about conspiracies. I can go back and forth. So I think I could have some fun on there. What it actually means for us in the end, I don't know. But I'd be willing to give it a shot. Would I be willing to pay for it? Maybe not. But I think, I think it's gotten to the point where, Crypto Chico might have a great audience, may have a lot of subscribers, but I think I can bring something to his show he probably doesn't have yet, and he can bring something to our community maybe that we're lacking. And I think if it's something that we could do that would benefit both sides, then I'd be willing to do it. Would I be willing to pay money to do it? That's a question, because I have no idea what his exposure would do for us. Just like he doesn't know what having me on his show would do for him. And I think it would be beneficial for both of us to find out. And I'd be willing to do it, but not really to pay for it, to be quite honest. I would pay for a 19-word Kevin show. I would as well, actually. I think that'd be quite interesting. It'd be difficult for me, but I think I could get it done. In XCM, awesome. Utility, CZ versus KM would be a bloodbath of the century. Yeah, I tend to think it'd be fun to watch for a spectator. It'd be a spectator sport for sure. A few more questions, guys, and then I got to go. I'll take another 4 minutes. What's your preliminary impression of the trading raffle? Could have a bit more exposure, but it's just a test. It's not a huge amount of money. There's definitely people out there, companies out there that are giving away like a quadrillion BTC and stuff. So it's hard to compete with those. But it's not about getting massive amounts of eyes on this. It's about testing what the conversion rate is versus impressions versus people actually clicking through and joining the competition. And I think we're getting that data. And to me, that's valuable. Yep, there you go. Super fund. Yeah. Self-managed super fund. Thank you very much, Bjorn. Some of them may join trams, sure. A couple of those guys from FX days were involved in PAM, so managed accounts, so definitely possible. Can you put a date on when Cardano will be listed? Can't, sorry. I can't say we're specifically waiting for a hard fork, but obviously if one is in the near future, it would make sense probably to wait. Unless we have a developer we can specifically sit on listings, which right now we don't. But I can't put a date on that, unfortunately. Reach out to Oliver on that. See where it says on his list. Tag him in Telegram. Did you comment on the repeat question from Natural Short on Reddit? I commented actually right in Telegram. It was asked in Telegram. Nobody's asked it again here. If you want to ask it again, I'll comment on it. It was something about profitability or something. But I answered it right in Telegram actually. He asked the same question as what is, okay. So I'll answer this again just because, well, why not? I think Natural Short just literally, I don't know, blew his top or something. Sometimes children have a hard time dealing with adults. So what is the CM's top line revenue? So yeah, top line revenue right now is roughly 5K a month. Obviously that's 1/30th of our burn rate. It's 3%. So we're not talking about massive numbers, but it has been increasing, and it is increasing with these testing marketing efforts. And the more important thing is that the money we earn from each active client is increasing. Our profit, well, obviously we're not in profit. I think we've made that pretty clear. If we're only doing 5K a month in top line revenue, then obviously, well, we're not making any money. We pay more than that for one bank account. So in terms of fees. So yeah, that's but profitability is coming. And the important thing is that those numbers are getting better and better over time. And that's what matters. How's it going with onboarding the 500K copy trader? As far as a trade manager, I think I already talked about that. In terms of the 500K, one of our investors is actually looking to allocate roughly that amount of money into one of the current trams. We expect that to happen over time. It's from a specific crypto asset, which we need to list, which is in our short list to get listed. Hopefully happens in August. All right, guys, I think I got to the end of questions. If I missed it, I apologize. You can tag me on Telegram at Kevin MURCKO. You can tag me on or tweet me on Twitter at Kevin MURCKO, and I'll answer it there. Thanks again, guys, for coming in. As always, appreciate everybody being here. Appreciate everybody throwing in their questions. Appreciate all the help from the Elite Telegram group. As always, I saw we have a couple new members in there. I think Musab, and I'm not gonna remember who else joined us in the Elite Telegram group, but welcome aboard, guys. Thanks for the help. And yeah, thanks to everybody. Have a great weekend. Spend time with friends and family. If you can't see them in person, get them on some digital chat. Say hi to them. Let them know that XCM is absolutely awesome. And merchandise store right around the corner. Daniel P has been working on it. So now we get to pressure him. I think next week that bad boy may go live. So get ready for that. And securities marketplace, guys, getting close. That's going to be a big one. And if you haven't checked out what we did at Singapore Blockchain Week, check our YouTube channel. If you can't see them yet, they'll be published soon. Our panel discussion and the one we did just this morning on a Q&A. I think they're insightful. They're pretty cool to watch. They're going to answer some questions for you. And yeah, guys, see you in Telegram. Ask me what you want to ask me. I'll answer it. Have a great weekend. Cheers.